Hey everyone, welcome back to Corporate Decoder, the place where we break down all the complex financial filings so you don't have to. Today we've got Northrim BanCorp's recent 8K filing, and let's just say they've been busy securing some serious funds before we dive in. If you love getting these kinds of straightforward insights into what companies are really doing, make sure you hit that subscribe button. And if you are looking for a community to discuss these findings and more, join our Discord server. The link is in the description below. Alright, so what we have here is a current report filed by Northrim BanCorp Incorporated. The most significant piece of this filing is about a big deal they struck on the 26th of November 2025. Essentially, Northrim BanCorp Incorporated, which we'll just call the company from now on, signed agreements to sell a whole bunch of debt, and not just any debt but subordinated notes. Think of it like this: if the company ever ran into serious financial trouble, the people who bought these notes would be pretty far down the list of who gets paid back behind other lenders. They managed to raise a substantial $60 million by selling these notes. The interest rate on these notes is pretty interesting. For the first few years, it is a fixed 6.875%. But then, starting in December of 2030, the interest rate will change. It will become a floating rate tied to something called SOFR, which is a benchmark interest rate plus an additional 348 basis points. That is a roughly 3.5% addition. So it starts out predictable and then becomes more variable. So what are they going to do with this $60 million? The company says they'll use it for general business purposes and to help them meet their regulatory capital requirements, which is important for banks. This usually means they have enough of their own money to cover potential losses. And this infusion of cash helps them maintain that buffer, especially as they look to grow. Now, a key detail about these notes is that the company can choose to buy them back. They can't do it anytime they want before December 2030, only under specific limited conditions. But after December 2030, they have the option to redeem them, meaning they can pay back the debt early, either all of it or just part of it when they do redeem them. They'll pay back the principal amount plus any interest that is due. The holders of these notes, the people who bought them, don't have the option to force the company to buy them back. It is super important to understand that these notes are unsecured. That means there is no specific asset backing them up. Plus, they are subordinated, meaning in case of bankruptcy or liquidation, other debt holders get paid first. They are also explicitly not guaranteed by any of Northrim BanCorp Incorporated's subsidiaries. This is just a heads up for investors to know their position in the pecking order. In connection with selling these notes, the company also signed what are called registration rights agreements. This is a common practice in private placements. Basically, these agreements mean the company has promised to take steps to register these notes with the Securities and Exchange Commission, or SEC. Eventually, this would allow the notes to be more easily traded in the public market later on. If the company fails to fulfill its obligations under these agreements, they might have to pay extra interest to the note holders. To spread the word about this deal, the company also put out a press release on the same day, the 26th of November. And they also shared an investor presentation with potential buyers. These kinds of presentations usually contain more detailed information and context about the company's strategy and financial outlook. Now, the filing also includes a pretty standard but important disclaimer about forward-looking statements. Essentially, the company is saying that anything in this report or in their future communications that talks about what they expect to happen in the future might not actually happen. They're warning that actual results could be very different from their predictions because of various risks and uncertainties. They're not making any promises about future performance. Finally, they list all the supporting documents for this report. These include the actual agreements like the indenture, which lays out the full terms of the notes, the note purchase agreements, and the registration rights agreements. They are essentially attaching all the legal paperwork that proves this deal happened and what the terms are. So, what is the big picture here for Northrim BanCorp? They've successfully raised a significant amount of capital through issuing debt. This can be a smart move to strengthen their balance sheet and support future growth, especially for a bank needing to maintain solid capital ratios. The fact that it is subordinated debt means they're essentially borrowing from investors who understand and accept a higher level of risk. The fixed to floating rate structure is a calculated gamble on future interest rate movements. If rates go up as they have been, the cost of borrowing will increase after 2030, but they are locking in a decent rate now. The move into subordinated debt, even with the registration rights agreements for future public trading, signals a strategic step to secure funding without diluting existing shareholders too much through equity offerings. It is a way to fuel growth and maintain regulatory compliance. Risks to watch include the obvious ones associated with any debt issuance. Can the company generate enough income from its operations to comfortably cover the interest payments, especially when that floating rate kicks in after 2030? The economic environment and interest rate fluctuations will be key. Also, while they've secured this funding to support growth, They need to ensure their actual business strategy and execution can capitalize on this financial flexibility. Overall, this filing shows Northrim BanCorp Incorporated proactively managing its capital structure. It appears to be a well-executed maneuver to bolster their financial position and prepare for future expansion. Alright, that is our breakdown of Northrim BanCorp Incorporated's latest filing. What is your take on these debt deals and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description for more discussions. Thanks for watching. See you next time.